If you are wondering why the Australian dollar gave up gains earlier today in the Forex market, then you are in the right place. You're welcome to Wall Street Niger FVG. I go by the name of Mashola Benigo Ofuya, the macro translator. As you already know, this is another Forex market breakdown. Let's get into it. Earlier today, the AUD released its labor data, the employment change and the unemployment rate. Employment change declined by minus 15K jobs, while the unemployment rate ticked slightly higher. Employment slowed in the month of July. The participation rate slowed in the month of July. Due to the sticky wages situation, the cost for labor may be hitting on some of these businesses and companies, so they're not able to create more jobs and create employment as they would want. Not to forget that the economy, in terms of inflation and core inflation, seems to be feeding into employment. Today's labor data doesn't really appear to be a scare for the Reserve Bank of Australia. I think overall we still have the risk factor from the Strait of Hormuz, considering the fact that the US are threatening Iran with some economic sanctions. But what we're seeing today and what's likely to end the week is that sellers may push the Australian dollar to higher lows for buyers to defend price. It's going to be interesting to see how that unfolds, and the next couple of labor data reports, especially for the month of August and for the month of September, are going to be very crucial for the Australian dollar. This concludes the update for the Australian dollar. I think the Australian dollar is likely to continue its strength, but maybe not through this week unless buyers surprisingly just push price higher, which I bet isn't going to be for all currencies that the Australian dollar is paired against. Do have a wonderful day and cheers.